Good afternoon, everybody. My name is Bob Van Kirk. I know I'm coming in here after lunch, so hopefully I don't put anybody to sleep. We'll try to keep it interesting. Feel free to interrupt with questions, but I think we'll have plenty of time for questions at the end. This presentation really is designed to hopefully meet you where you're at. So I don't go into a lot of technical things about Bitcoin or cryptocurrency on purpose because it can put people to sleep and or it'll be over people's heads. And so if you do have those questions, I'm happy to talk about them at the end. And I think that's valuable because then I can speak directly to the things that are going through your head. Does that make sense?
Yep.
Awesome. So who has heard of Bitcoin? So what's funny is about 10 years ago, I was giving presentations on Bitcoin and most people didn't raise their hands. And now nearly everybody's heard of it. How many people own some Bitcoin? Wow, it's pretty good. So yeah, we're on track there. It's looking like about a third to maybe 40%, just roughly by the hands. And I think in the future, you will see everybody owns some Bitcoin in some form or fashion. So you might own it and not even know it right now. There are companies who are buying Bitcoin and they are adding it to their balance sheet. And you may end up owning that company in your 401k, your IRA, other investments that you may have. And so I think it'll become commonplace for everybody to own it, if not directly, then by proxy through some of these other companies or the ETFs. So again, we'll get started, kind of go through what I'm going to cover today. I kind of broke this up into three sections. So the first one is maybe for a lot of people, what may seem rudimentary and why are you talking to me about this in respect to Bitcoin? But I think it does address some of the currency part of what people call cryptocurrency. And so we'll talk about what is money, and then we'll talk about the problem. And then I give you a little bit of data so you can kind of see where things are at. But again, I don't want to put you to sleep with a bunch of data. And so then the last part really is to talk about it through the eyes of a treasury department at a company. And so you guys can understand why some of these companies are starting to look at this seriously. And if companies are doing it, and you may have heard that the Trump administration recently signed an executive order to create a strategic Bitcoin reserve, why are countries looking at this? And maybe why you should be looking at this as well or educating yourself on it. Does that make sense? Good so far?
Yep.
Nobody's sleeping? All right. Just a little bit about me. So I co-founded a company called Oida, and that focuses on educating financial institutions. And we also have, we found that financial institutions work very slowly in their adoption of cryptocurrency and Bitcoin. And so what we also found a market fit for was a consultancy that helps individuals and corporations with their adoption of Bitcoin. So we have a company called Account Grower LLC. I spent 21 years in banking, left 2 years ago to become a consultant, and I'm a certified treasury professional. I've been studying Bitcoin for over 12 years, which, if you know, Bitcoin's only been around for about 16. And yeah, I spend most of my time professionally now educating a variety of different people on Bitcoin and treasury at a bunch of different levels. So yeah, we're going to talk a little bit about what is money. And the reason this is so important is because when you poll most people, they say that they know what it is. But the issue is, I mean, we use it all the time, right? You're using money all the time. But the issue is that we only know it as we interact with it. And so what I wanted to give you guys a little bit of a perspective on is maybe a little bit of the history of money, okay? And so I'm not gonna go way back, but a lot of what I'm gonna talk about today will maybe give you a little bit different perspective than what you think about money and just how you interact with it. And I think this is important to kind of tee it up for understanding Bitcoin from the standpoint of what problem it solves. okay? And so, we have the textbook definition up there. Money is any object that is generally accepted as payment for goods and services, okay? And so this is kind of the textbook definition. The abstract definition is money is the physical and now mostly digital representation of human time and energy. And so this kind of leads into the problem, okay? And we'll talk about the problem. But if you think about it, when you work, when you put out effort, you have limited time and energy on this earth in order to do that. Now, we don't know how long each of us are gonna live, but you have a limited amount of time and energy that you trade for money. And that money is then used to what? Provide for your basic needs, hopefully. And then if you are able to make more than what would cover your basic needs, you're able to buy goods and services in the economy that make your life better, right? And so, I want you to be thinking about that as we talk about Bitcoin. And I know that seems really rudimentary and simple, but a lot of people have lost sight of the fact that we have to trade our time and energy for work. And that work produces money, and that money buys us things, or in what we're gonna look at, it allows us to save, to store up for a later time, right? So we're not just living hand to mouth or paycheck to paycheck. All right, so let's just look at, and I don't have too many slides on this because again, I know we just had lunch, but if you look at the progress of a money in history, it has to do certain things. And what I've done is plucked out really the 4 main things that it needs to do in order for it to be a successful money. So usually money, and I didn't put this on here, but usually money starts out as a collectible, where people in history have adopted a certain money and they've said, hey, I think that this is the best money for whatever reason that is. And a lot of times they get laughed at, scoffed at, everybody thinks they're crazy, but it's just a collectible at that point, okay? So that's not on the slides, because once it becomes a kind of money and more people start adopting it, it becomes a store of value. So this is the progression, okay? I don't have the timeline on this, and we don't know exactly how fast this happens with any money. But what we do know is it happens in this progression. So it goes from collectible, where only a few fringe people are using it, then it goes to store of value, okay? So it has to store the value where people are looking at it saying, hey, this is difficult to create. And so this is something that could be used as a store of value. So traditionally, we've looked at things like gold, right? People have said over time, gold is a good store of value. We choose to look at plenty of other assets as stores of value, but that doesn't make them good money. And the reason is because of the next one, which is medium of exchange. So it progresses from, again, collectible to a store of value to a medium of exchange, where you can go out in the marketplace and exchange that money for goods and services in the economy, where just about anybody will take it. Are we following so far? Good. And then for a lot of people, it's at that point, it becomes your unit of account. So it is something that you measure your wealth in, or as I put up here, the denominator that we use to denominate all of our wealth in. So if you have a house, we say that's worth how many dollars. If we have a car, that's worth how many dollars. If we have Bitcoin, it's how many dollars. So we're used to using dollars, that's our unit of account. But this is an important one because everybody agrees in a society that this is what we're going to denominate our wealth in. And I'll point more to this in a little bit. The last one I think is really pertinent and relevant to this conversation is fungibility. So $1, for the most part, is $1, right? Anywhere you go, if you give somebody $1, everybody knows what that is, and they know what the value of that is, and they're willing to exchange goods and services in the economy for that dollar. And so some monies over history have had this problem where, one seashell isn't worth as much as another seashell because of how pretty it is, the size, and those things. But with the dollar, we've enjoyed it because it's the same no matter where you go across all kinds of different jurisdictions. In fact, I think most of us know it's the most accepted money on earth at this point, right? Most people will take it just about anywhere. If you've traveled anywhere, even overseas, a lot of places will take the dollar. So what's the problem? And why am I talking about this? I think it'll kind of become clear. So most of us know, and again, I want to meet you where you're at. Most of us know we have this insurmountable debt. And I took this screenshot off the debt clock, usdebtclock.org yesterday. So it's a little out of date because, as you know, that keeps rolling and rolling. But we're approaching $37 trillion in debt. And this is just our nation. And so most of us know this is out there, but we maybe aren't realizing the gravity of the situation. And so what's happened is over and over again, we have these fiscal deficits, meaning we're taking in less income than we're spending as a government. So that means we have to borrow. And so there's this constant borrowing. And this constant borrowing has totaled up to close to 37 trillion. Now, we're paying almost $1 trillion a year in just interest. And so just to kind of give you some perspective, it's far more now than our defense spending, which is traditionally one of the biggest expenses. And debt to GDP is near 123%. So we're basically, in a world of hurt. And other countries have this problem too. Japan is around 230%. And there's other countries that have a similar problem, but the problem for us is that we're the world's currency, right? Everybody accepts it everywhere, just about. So what does this lead to? If we don't get this fixed, mathematically, we can't bring up the GDP of the nation fast enough in order to start paying this down. So I'll submit to you that despite the cuts that are happening in Washington, and if you look at it, it's true, they've totaled up all these things that they've done in terms of cutting, but the reality is they're just repositioning that savings to spend somewhere else in the economy. So the big issue is this isn't going the correct way. Like, it's not going the right way to fix it, right? And so what does this lead to? This leads to money printing. So essentially, our government, and by proxy the Fed, can print dollars out of thin air. And they do it. And so the issue is that if there's the same amount of goods and services in the economy before and after any printing of money, what has to happen? Those dollars, those new dollars, in addition to all the dollars that are in existence, have to chase the same amount of goods and services in the economy as before. And so what naturally happens? Prices go up, or you can look at it a different way and say the dollar is losing purchasing power, okay? And so some of this we see in the short term through inflation, like they measure that and we can see it and understand it. And so this is not me railing against the system. We all live in it. It is a fact. This is happening. And we can see throughout history, they have a 2% inflation target rate. And so no matter what, it's not a red or a blue problem, it's an us problem. And whatever political persuasion you are, it does not matter. Both sides spend money, and they're not stopping this, and they can't. And so because we're losing purchasing power, this is the store of value problem, okay? So this is the whole reason that we're talking about Bitcoin, because Bitcoin solves this problem. Does anybody know, I know there's a couple of people, but does anybody know how many Bitcoin will ever exist?
26,000 or 26 something million or thousand?
Close.
21 million.
Yeah, 21 million is the correct answer. And so further subdivided, just so your brain can recalibrate here, it's 2.1 quadrillion subunits, okay? So, excuse me, everybody talks about Bitcoin being 21 million, but it can be further divided by 2.1 quadrillion subunits. Okay? Are you following? It's a lot. It's a lot. It's a big number.
It's like dividing $1 in quarters, is that what you're saying?
Yeah, so like for $1, right? If everything was measured in dollars, which it is, we divide that by up to what? Pennies, right? So it's divisible by 100. Well, each Bitcoin is divisible by 100 million units. And that's how we get 2.1 quadrillion subunits. So it's not 0.01, it's point and then 7 zeros and a 1. That's the smallest unit. So it's divisible so that it can scale, and we'll talk a little bit about that later. But I wanted to introduce that idea now just so you know that there is a fixed supply, and that's super important as we look at the problem versus what we all save in, which is the dollar. Okay, so now I'm going to mesmerize you. Oh, go ahead. Yep, you got a question.
Yeah, so where does the 21 million come from? I mean, who said that?
Yeah, that's really good. That's a good question. So the 21 million was hard programmed into the code when it was introduced on the internet in 2009. So essentially it was made to be that way, and Bitcoin works with, and this can get technical and we can talk about this more maybe at the end, but Bitcoin works on a consensus mechanism, so that can't really be changed. It could be changed hypothetically, but the people who would have to choose to change it all hold Bitcoin, and they're not gonna vote to increase the supply because of the problem that Bitcoin solves. You're not gonna vote against yourself. And maybe you would, for whatever reason, but on a whole, people don't generally en masse vote against themselves, right? So there might be factions of people who don't understand things that want to vote this way, but on whole, most people understand what Bitcoin represents and what problem it solves, and so they wouldn't vote to change it. Okay, so it's hard coded into the protocol. And maybe before I go to the next slide and start kind of showing you the proof of why Bitcoin performs and why you should be looking at it, maybe I should talk about this. And this might really be controversial for some people, or you might have to like go home and think about this one. But Bitcoin is a protocol, okay? And so if you know anything about protocols in history, you don't have to, like, it's a winner-take-all scenario. So when something like this comes along, it's a winner-take-all scenario. So I'm gonna liken it to the wheel. Sure, there's been different versions of the wheel, but the wheel still stands today as one of the best ways to move things around, right? I would also say fire. Sure, we have a lot of different fuel types, but fire is a protocol that doesn't need to be rediscovered, okay? Bitcoin is very similar. TCP/IP, which you use for email and the internet, is a protocol, and that's a winner-take-all protocol. It's what everything runs on, and so this is very similar to that. Bitcoin is a protocol at its very base, and I just wanted to point that out there because inevitably at the end of the conversation, somebody will say, well, what if there's another one? And this isn't like that, and I can go into that more if people want to talk about it. All right, so let's look at a couple of things as an investor. So this comes from yesterday. Now the market moves, right, every day, and Bitcoin is trading 365 days a year, 24/7, 365. And so to some degree, there's some benefits to that, but there's also, some people would say, ooh, that's a negative, right? Because it's trading even when I'm asleep, and so what if I miss something? But this is from yesterday, so again, it could have changed a little bit just because of how close things are. But if you look, Bitcoin is a top 5 asset in the world. Now, how did this thing go from 0 to a top 5 asset and be on the same page as gold, Apple, Microsoft, Nvidia, just passed Google yesterday? It's already beat out silver. So just think about that. For me, being in this so long, it's unbelievable. But maybe for you, you're like, okay, so why does that matter? The reason is because as people look to deploy their wealth, they want the top assets. And so as this continues to climb in the ranks, the thing here is, regardless of whether it's 7, 5, 2, number 1, everybody's looking at this list. This is where people are storing their value. And so Bitcoin being on that list, just think about it this way. If you're an asset allocator for a large family office, or for a high net worth individual, or for maybe even a company, and they say, hey, we noticed we have a good mix of everything, but we don't have Bitcoin, or we don't have NVIDIA, or we don't have gold. Like, for that asset allocator, if that top 10 asset outperforms and their clients don't have access to it, they might be on the chopping block, right? Somebody might say, well, maybe I should go somewhere else with my money because I can get exposure to the top assets in the world. So I think this is an important point. You guys have seen fluctuations in the market the last couple of days.
Yeah.
If you're paying attention to your portfolio, how many people have seen big swings? So it's gone up and down, right? Like, it's not just one way, but mostly since the tariff talks, it's gone down, right? So one thing people always complain about Bitcoin is that it is super volatile. And I would say yes, it has been. But the interesting thing is that for the most part, it has followed the NASDAQ 100, so tech stocks, until the last few months where we see a divergence. So we've actually seen the NASDAQ go down and Bitcoin go up. And so a lot of people would argue it's decoupling, but I think that's hard to argue still at this point, just to be honest, even though I love Bitcoin. I think that the reason that's hard to argue is because over a long enough time period, you can see that they have matched up pretty well. And so, we might be able to expect that to continue, but as for recently, Bitcoin has actually held up a lot better than most of the stock market, including tech stocks, which are looked at as risk-on assets, right? Because we don't know how well they're going to do. So I just wanted to show that. Also, like, as we look at volatility, the next slide might be interesting because a lot of times investors will look at the volatility versus the performance. And so one interesting thing about this data that we get from Yahoo Finance is that over the last 5 years, Bitcoin has a sizable outperformance of the S&P 500 with around the same Sharpe ratio. And so what's interesting is more and more people are taking notice, not just individuals, but institutional investors. And we'll talk more about that in a little bit. But you would expect the Sharpe ratio to be a lot worse. And we've seen bonds have underperformed, especially lately if you're a bondholder. So we talked about money supply. So M2 is where we can calculate roughly the amount of currency in the system. And so when I say M2 or fiat currencies, I'm talking about all government issued currencies. Okay? So what this is showing you is the S&P has largely underperformed, or at very best, just kept pace with the money supply. So as they print more money, the problem is if you're measuring that, your asset, the S&P 500, in dollars, what good is it if it's gone up in value 13%, your portfolio, because you're in the S&P, but they've also increased the money supply by 13%. Everybody tracking with me? So they print money and the S&P goes up by the same amount. And so when you have to get back out of that asset, you still have about the same purchasing power as when you got in. I don't like to point these things out to investor groups, but I'm just showing you the data.
With the wrong unit of account.
Exactly. So yeah, this is the issue with unit of account. So now let's look at Bitcoin. And I'm not cherry picking this stuff. Like this is over hopefully a good enough time frame here. We're going back to 2013. So for Bitcoin, you can see that it actually does track with M2, right? It's pretty similar in its shape of the movement, but you can see that it outperforms. So this is just another way to look at what problem Bitcoin is solving. If we know that we're in so much debt and that we're not going to curb that debt and go back the other way, start paying it down, and we know they have to print money in order to keep the system afloat, basically paying back old debts with newly printed currency, this is the problem that Bitcoin solves. Are you guys tracking with me so far? Okay, I know it's a lot of data. I'll just show a couple more slides on this, and then we'll switch into the business side of things, like a treasury department, and then we'll leave time for questions, like I said. But, so this just shows the directional alignment with global liquidity in 12-month periods. So if you look across 12-month periods, going back to 2013, like I showed in the last graph, Bitcoin correlates extremely well. In fact, it's the best asset to correlate with money printing. The S&P does a pretty good job. We saw that graph as well. And then you can look at some of the other. Gold does okay, pretty good. And lately gold's been on a tear, to be fair. And then this one I thought was valuable just from the standpoint of this is just an average rolling 12-month. Bitcoin actually outperforms pretty well, and a gold as well. So again, as they print more money into the system, this is the data for Bitcoin. Now let's look at safe haven assets over the last couple of years, just to make it interesting. So what are traditionally safe haven assets? Gold, but let's look more importantly at what is the most liquid. It's US treasuries, more specifically T-bills, right? So those are short-term treasury bonds. So why are those so desirable in the past? Because we're the world's reserve currency, meaning everybody takes it, right? We talked about that. Everybody will take it as money. It's very liquid. There's always buyers. There's always sellers of it. You can get a yield while you're just sitting on the cash waiting to deploy it into whatever business you would have. And so this is usually a really good and stable place for people to stick their money. And so a lot of times, like financial advisors will tell you, once you're towards retirement, you should have a 60-40 portfolio. Have you heard of that? Well, I can submit to you that that idea is dead. And if that's the way you're positioned, you might want to have somebody take a second look or challenge your financial advisor. So let's just look at the volatility of the US 10-year treasury, which if you look at it over a long enough time period, it goes up very slowly or down very slowly. And this is just over the last year. And so it's very hard for some people to understand this if you don't pay attention to the bond market, but this is ridiculous. This is not what bond traders and bond investors expect out of a 10-year bond from the United States government. So it has been super volatile. And if you consider that one of my first slides when I was introducing the problem is that on that slide, I told you that the amount of debt that we have and that it's nearly $1 trillion in interest a year. We have about $7 trillion that needs to be refinanced in the next year or by the end of 2026. So if these bond rates continue to be volatile and you have people not wanting to invest in treasuries, that could become a problem because the US has to basically refinance all of its debt. And if people aren't willing to do that, what happens? The bond prices go up, which means our interest expense goes up. So the problem exacerbates itself. So you guys following me so far, or are you guys ready for a nap? I know it's a lot of economics and data, but I want to present the problem because Bitcoin, honestly, it's somewhat irrelevant without understanding through this lens. It's just a technology. It doesn't matter. But when you understand what problem it solves, which is this and what we've been talking about, then I think it makes more sense why more and more people are looking at Bitcoin as an investment. And so again, I wanted to meet you guys where you were at and hopefully give you some perspective on this. So let's shift gears. Actually, before I do that, any questions or comments on all the data before I shift gears into why a corporate treasury would be looking at Bitcoin as an investment or as a treasury asset rather than just holding cash or other assets? Go ahead, Chris.
So China and some of our other trading partners that we pissed off are already dumping treasuries.
Yeah.
Do you think we're gonna be able to get them back into, kind of resolve the relationships, get them back buying them and everything? Or we're gonna have to look for other sources of investors in these things? I know stable coins are starting to take up some of this slack, but,
Yeah, this.
where are we gonna find the buyers?
Yeah,
after
it's really hard to answer. So just for the audio on the recording, the question was, we've already aggravated China with our tariff policies, and they've started to sell their treasuries, their T-bills and their treasury bonds, their longer dated bonds. And that has created a lot of this fluctuation and problems. And then knowing that we have another several $1 trillion to refinance, will we get them to buy bonds back? Will we find other buyers? I think that it's really hard to say because this is all dependent upon the policy of the president. And so I think something has to bend somewhere. I'm beginning to believe that this is more rhetoric than it is actual, actual policy for the long term. And the markets have priced it as such. A 20% correction in the stock market occurs usually about every 3 years. And so that's kind of where we've seen it go down to. So it's hard to say whether or not, if he keeps his foot on the pedal, then we could see more problems, more selling from foreign countries. But it's really hard to say. If something breaks, you could see the Fed step in and inject liquidity into the market to fix any holes, right? And that means they're printing money, probably. So I think it's a good question, but it's you probably know as well as I do. I think what I want to point out to everybody is that you start to understand what the problem is, right? That's what we're talking about. So hopefully you're starting to see it. All right, so we're going to move on to the anatomy of a typical business treasury. So I want you to put on, does anybody have treasury experience for a company? Okay, perfect. Well, then you can come up and present. No, I'm just kidding. But essentially, what I want to do here is just show you guys the way that a treasury department would think, okay? And so a lot of times they're going to have cash equivalents, so that's where they're going to be putting, kind of medium-term money into treasury bonds, and sometimes money market funds, and at a local bank, maybe a CD, right? And then lastly, they're going to invest in marketable securities, okay? So this is really the three areas that a treasury would typically have their balance sheet positioned. And the reason for this is, depending on the type of business, they're going to want cash on hand for the needs of the business, right? If you're running a business, you have to pay payroll, you have to buy inventory sometimes. There's things that you have to buy, inputs, right, for your output, right? And the goal is to make a profit. And so, but they need cash on hand to do that. So you can't put everything into one of those three buckets that I was talking about. I guess you could keep a lot of cash, but again, knowing that we're losing purchasing power with it, you're kind of incented not to do so, right? And so this is, again, what is going through people's heads. So depending on what type of business you are needing assets for certain things. And if you're a large company, a lot of times if you're sitting on too much cash and you're not trying to expand your business, you're looking to acquire a different business, right? So we see successful companies buy out other companies all the time. You have startups is up here, and so the idea would be, hey, we need this cash in order to continue to ramp up our business and get it off the ground. And then a lot of times the small to medium sized enterprises don't have access to the capital markets, which is the capital debt markets. And so what they have to do is go to financial institutions to borrow money to fund their operations, right? And sometimes tech companies derive balance sheet value from IP, right? Intellectual property. So they can't really leverage it or use it as an asset to borrow against, but they do put it on their balance sheet to say, hey, this is valuable in the event that we would need to sell it off or sell our company, there's value to this. So just again, to try to get you thinking about how these treasury departments think. So one of the things that I think is important to understand, and this is just a data point for you, is that Harvard Business Review said that businesses are now holding on to 400% more cash than in the year 2000. So most of the companies are really well capitalized. It's great, but what did we talk about with the problem? So if you're an investor in these companies and they're sitting on large cash positions that aren't working for you, this is what I would call, and a lot of people call, a melting ice cube, right? Because if you're just sitting on cash and maybe you're earning a little bit of interest income from wherever you have this placed, but if inflation and M2 is eating away at that at a faster rate than the interest you're earning, you're losing purchasing power. So I think we can all understand that on the on the big scheme of things, and then also for you guys individually. So let's just take a look at a company that everybody's probably familiar with, whether you have an iPhone or not. One of the biggest companies in the world. We saw them on the top 10 list. I would like if most people understood what was going on with Apple, they would have shareholders outside Cupertino with pitchforks, and it would be a problem if people realized what was going on. So they've been sitting on so much cash, 162 billion in cash, that in nominal terms, or in real terms I should say, in the last decade, they've lost about $15 billion in purchasing power just by sitting on all the cash that they have. So again, I'm not trying to say down with the system or anything like that. What I'm trying to get you to see is that this is a real problem for real businesses, including some of the most profitable businesses in the United States and around the world. And if it doesn't get addressed, it just gets worse and worse.
Is that 15 billion compared to, like, where is that 15 billion coming from?
Yep. So it's the inflation adjusted return net of whatever they've gotten from those different, let's see if we can go back, from these different buckets. So these are all the places that they hold their cash. And so they're getting a return here, they're getting a return here, a return here, all of these things. This is the debt side. But net of all of this, if you look at the inflation that's actually been reported, and net of the income that they're getting off of that cash, how that cash is performing, they've lost $15 billion in the last decade. Does that make sense? So it's like, over here, here's what we make on all our cash. Over here is what inflation did to eat away at it, and here's the net. The net is a negative 15 billion. Is that good? Awesome. All right, good question. So, how can Bitcoin augment a business treasury? So, what entities are thinking about is not just the returns, that can come from Bitcoin. They're also looking at, obviously the inflation one we talked about, but they're looking at counterparty risk and liquidity constraints. So we talked about how Bitcoin can trade 24/7, 365. That's actually a positive for a lot of these companies because they're operating in multiple jurisdictions across the world, and sometimes they're not able to get their hands on cash to deploy it where they need to. And because Bitcoin trades, again, it's a 365 day a year asset, they can actually turn it into other currencies anytime, day or night, across the world. And this is a benefit for them because they can deploy it wherever they need to. We'll talk a little bit about the counterparty risk, but the other thing is, I don't know if you've seen the performance, but because Bitcoin has done so well, the performance of companies who have added Bitcoin to their balance sheet a lot of times gives these companies a strategic advantage over their competition. So that's just an interesting one, because you could look at it the other way and say, hey, if Bitcoin goes down, maybe it's a strategic disadvantage, right? I like both sides of the argument, so I'll just point that out. But here's one of the things that I think people should look at, even for you. Am I saying you should put all your money in Bitcoin? No. And I don't, when I consult with companies, I don't suggest that either. But this is just a place in time over the last 5 years. If you look, if you had put all of your money in cash, you lost almost 18% of the purchasing power. So if you just sat on cash in a checking account over the last 5 years, you lost 18% in purchasing power. If you had a mix, if you had just the money market fund where the bank is paying you a yield, you still lost about 8.5% purchasing power. So again, this is net of your income from your financial institution or from anything you would put your cash into. This in particular would be a money market fund. If you had just held 97% cash, which again, that 97% lost about 18% of purchasing power, and you only made an allocation of 3% to Bitcoin, this is how it performs over the last 5 years. So again, I am not saying turn your entire investment portfolio or cash in your entire savings and put it into Bitcoin. But what I am saying is that by putting a small allocation into Bitcoin, you can actually hedge without taking on a lot of risk against all this other stuff that we've been talking about, the problem. Yes, sir.
Is the discrepancy just as wide if you go further back? Because part of it was like we injected a whole lot of M2 money supply over the last couple of years, which drove that down.
Sure.
Like if you extrapolate it back out to what 2009, so when Bitcoin started,
it's even worse. I mean, and better. I mean, when I say that, I actually took this because I think it's more recent data, whereas prior to this, the outsized performance of Bitcoin was so high that we could have said, 0.3%. And so what I think is happening is the market is starting to understand this. And so it's going to be, in the future, I think, a higher and higher allocation. It'll take a higher and higher allocation towards Bitcoin percentage-wise in order to get the same performance. And that's because people are snuffing this thing out. They're understanding what tool Bitcoin can be used for. Does that make sense? So I think in the future, we might say, hey, over the last if we go to 2030, we might say, over the last 5 years, it was more of an allocation of like 5% in order to get the same. Does that make sense? Mm-hmm. So you will have to take on more risk, but I honestly think that we'll also see more volatility in the rest of the markets. And so people will be incentivized to do more of a higher percentage in order to offset the issues with cash. Does that make sense? So just let's look at the Bitcoin ETFs for a second. So this has opened up the door for a lot of companies and individuals to hold Bitcoin without actually buying actual Bitcoin. So is everybody familiar with an ETF? So it's an exchange traded fund, right? And essentially what it means is whatever the exchange traded fund purports to have, they have to keep reserves of it for their clients. So the ETFs for Bitcoin launched January 11th of 2024. So it's been just over a year. And so all we're doing is looking at the performance of the ETFs versus some other asset classes that people would look at. So Bitcoin is up 99%. Gold is up 47%, so that's pretty good. And I think the numbers may be a little old. I think actually gold is up a little over 50% now because of the last few days. SPX, 19%, so again, it's done pretty well. Triple Q, 17%. And then I just threw in there the second biggest cryptocurrency is called Ethereum. You might have heard of it. It had all the buzz. That has performed since the Bitcoin ETFs, negative 21. And that's despite the Ethereum ETFs got approved in the middle of last year. So even though it's been easier for people to get into them, the market is not choosing to go with the second best. They're going with the best. So I think that's just something to look at. And this is honestly what a lot of corporates, the treasury departments at corporates are looking at. And so I talked a little bit about the reasons or the benefits to companies. So liquidity management, again, banks are only open on weekdays during business hours. Bitcoin trades 24/7, 365. Counterparty risk management. So does everybody remember the bank failures that occurred in 2023? So some of those startups actually had to make payments to vendors and to payroll to keep their employees happy while they were sorting that whole mess out. And they saw that they could use other currencies and they could use Bitcoin. So some companies are looking at Bitcoin as a way to prevent some of these catastrophic failures from really impacting their day-to-day business operations. So what are the top concerns that a corporate would have? And maybe you would have these too. So that's why I bring it up. The top one was actually about accounting and tax treatment. And it is still a problem, but FASB changed the rules at the end of 2024. And so now you'll start to see more and more companies dive into Bitcoin because that problem, some of that problem has been fixed. So it's the way it's treated. Bitcoin used to be treated in accounting terms as something like IP, an intangible asset. So intellectual property, like having a patent. Well, that patent doesn't produce any income, right? Other than in your own business operations. And so the way it was treated for accounting purposes was you couldn't mark up, like if Bitcoin goes way up, you can't take the gain. But it does work the other way, where if Bitcoin goes way down, you would have to book the loss. That all changed at the end of last year. So I think that has been, I think, ironed out a little bit. Some of the other things that people were worried about at companies, custody and trading risks, regulatory uncertainty, which I think with the new administration we're seeing. There's new technology coming out all the time for custody. And then a lot of people have begun to see, because I think 5-6 years ago, the volatility was the biggest one. And now people are saying, oh, based on how we measure this thing, it's actually not that volatile. And then lastly, it's mainly just people sticking their neck out there inside their company and saying, hey, we should add this to the balance sheet. And then worrying about the blowback and having to educate people all on what Bitcoin is and how it works and why they would want it on their balance sheet. So that actually has come way down as well. Just a couple more slides and then we can take questions. So yeah, treasury adoption. This is really, reason I put this slide in here is just show you that both public and private companies are adding Bitcoin to their balance sheet. And there's actually a website I'd recommend if you want to look up more data points. bitcointreasuries.net. They actually keep track of all the companies. We're over, I have a slide in here that I'll probably skip over, but at the end of let me say it this way. At the end of 2020, there were two publicly traded companies that had announced that they were buying Bitcoin. And at the end of 2024, it was 13. And now it's over 100. And so if you look at the curve of adoption, where do you think it's going? And again, remember, let's just go back to the simplicity of there's only 21 million Bitcoin. That means there's only so much to go around. And you actually have a verifiable fixed supply of something. So why do you think the price keeps going up?
Supply and demand.
Supply and demand, and there's a capped supply. So once it's gone, it's gone.
I think FOMO started to set in too with
Yeah.
U.S. Strategic Reserve, nation states, institutions all starting to pile in.
Absolutely, yep. So this is just showing a breakdown of the institutional Bitcoin ETF holders. Not too much to say about that one. I think this could ebb and flow, but you see like the riskiest guys, the hedge fund guys, are the ones who really taken to it, and I think it's paid off for them and their clients. So one of the most notable companies, has anybody heard of MicroStrategy? Okay, so they were one of the two in 2020 that announced that they were buying Bitcoin. And they've actually renamed their company to Strategy. And this is just I took this snapshot from my phone. They have an app yesterday. And they own 538,200 Bitcoin as of yesterday, out of the 21 million total. So they have gone on a crazy spree over the last 4.5 years about 4 years to buy Bitcoin. And they're not stopping. And so you wonder like, hey, how come this company that I've never heard of, for some people, has bought all this Bitcoin? How could they do that? And it's an interesting story. I won't go into too much about it, but I do think that this is a company to watch. And if you want easy exposure to Bitcoin without learning the technicals of Bitcoin, that one is one to look at. They use the capital markets to borrow very inexpensively, and then they take that money and they promise the lenders that they're going to buy Bitcoin with all the proceeds from those loans. And so it's been very profitable for them, depending on how you look at it. So that's just an interesting one in case you're looking for something. This next one I'll skip. Just wanted to show you guys the history of Bitcoin adoption real quick. So again, Bitcoin started off, and you had Microsoft, Dell, Newegg, and Overstock, you might have heard of some of those guys, starting to accept Bitcoin payments all the way back in 2012. But because we were so early in the adoption cycle, nobody used it. And this just points to, again, we're still in, I think, with Bitcoin, the store of value phase. Like we talked about the progressions of money. It would need to be a medium of exchange on both sides, meaning someone's willing to accept it for goods and services. Someone also has to be willing to spend it. But because Bitcoin is really right now solving that store of value problem, most people aren't willing to spend it yet. We'll keep going on here. So there's mining, which we can talk about later, but this again is where MicroStrategy and Block added it to their balance sheet. So those were the two companies I was talking about in 2020. In 2021, Tesla actually bought 1.5 billion in Bitcoin. They did pare that back a little bit and sell some, I want to say in 2023, but they still have a pretty good holding. And now more and more companies are adding it to the balance sheet. And if you see there, that's what we were talking about, the FASB accounting rules changed in 2020. Well, they were proposed in 2023 and got approved at the end of 2024. So let's go back to this. The store of value solution for a lot of companies, and maybe for you, is Bitcoin. So again, I'll kind of wrap it up here and give us time for questions with this same data that I had on that first slide. So that, again, just brings back to mind what problem as a store of value is Bitcoin solving versus the dollar or dollar equivalents. And really this goes for all other currencies too. All these other countries are indebted and have problems with money printing or money creation. And really the reason the dollar has been so strong is because a lot of us will call it the cleanest dirty shirt in the closet. So all these fiat currencies have a problem. We've seen other countries where their inflation is far higher than the dollar. And the reason that you probably don't know that much about this is because really, for the most part, the dollar has been pretty stable. It's been pretty good. But you have noticed, I'm sure, prices going up or your purchasing power going down. And so I think maybe what's happening with the tariffs, if you look at it this way, is somewhat of a repeat of what we had with the COVID problem. And why do I say that? What happened with COVID? The scare was we're shutting down the economy, and so there's a supply issue, right? No ships are coming in with all the goods. And so the Fed would say, hey, inflation is gonna occur, but it's transitory. Why? Because eventually this will lighten up and we'll have ships coming through again. Well, if you look at what Trump's done, it's essentially he's put a blockade, not just a tariff. I mean, based on the rates of the tariffs, he's blockaded Chinese goods into our markets. So maybe inflation is transitory again, but for me, it kind of looks like another supply issue in certain areas where we get these goods from China. And so who knows if it's long lasting or not. Chris and I kind of went back and forth on that earlier, but it kind of looks like a similar situation, which means maybe once again, they'll have to bail out the economy in some way when something breaks and this process starts again. So I'll end it there and let you guys ask questions. If you guys want to go technical, I'm happy to. If there's no questions, we can end early, but I'm happy to kind of field any questions from, I know it's a broad topic, so go ahead.
Probably gonna show my ignorance. So Bitcoin is a cryptocurrency, but there are other cryptocurrencies out there. What's the difference?
I was ready for you.
I knew you were.
This is the best slide, but it's at the very end. So we're gonna go back to what is money. And here's what I will say to simplify this for you. And I describe this as a protocol, right? So once you invent fire, you don't need to reinvent fire. Once you invent Bitcoin, it doesn't need to be reinvented. When we look at the progression of money in history, it always goes from collectible to store of value, medium of exchange, and unit of account, okay? What other cryptocurrencies, the copycats of Bitcoin, attempt to do is they'll sell you on all this technology of what they're trying to do better. Most of them are saying that Bitcoin is too slow. And so what they purport to do is speed up that process. But what they're doing is they're skipping right past the store of value phase and trying to go right into medium of exchange and getting you to use it as money. Well, the problem is, if nobody on earth is accepting this as a store of value, then it can't really be a medium of exchange. You can't speed up the adoption. And so if you look throughout history, just amongst fiat currencies, money has always gone through this process. And we don't know how long it takes for each one, but it has to become a store of value first. And what these cryptocurrencies have tried to do is say, hey, we can do it better than Bitcoin. But the reality is you can't skip over store of value, and that's what Bitcoin solves. So that's a simple answer. Did that help? Or
That helps.
yeah, and I don't want to pass it off. Go ahead. You have a follow-up question?
I saw actually a meme the other day that I think was like really simplified it. Doesn't go into all the details of why you're better, but it was like fiat, only the government can print money. Bitcoin, nobody can print money. Altcoins, anybody can print money.
Mm-hmm. Yeah, that's really good. So I think that's one of the key points is that Bitcoin, because of the protocol and the way it was created, cannot be changed without this consensus of the masses. And so it can't be created out of thin air. We can't inflate the supply. Whereas governments and central banks have the ability to put more money into the system at will, right? They hit a button and it prints it. They print more money into the system, so we get more M2. Same thing with other cryptocurrencies. They're man-made. Usually they have like a foundation or a founder or something like that, and they can change the policy, the monetary policy at any time. And we've seen that a lot with Ethereum, which is the second most market cap cryptocurrency. And that's why people aren't adopting it, is because it's super volatile and it's controlled by men.
So, I'm understanding this, the alt cryptos
Mhm.
aren't based on the 21 million coins.
Correct. So, I mean, we could talk about a lot of different cryptocurrencies and their policies, but I'll give you one that maybe is irrelevant now, and you could probably understand why. So, one of the first major forks of Bitcoin is called Litecoin, and it's still in existence today, but nobody uses it. And the difference is that it was 4 times the supply, and then they monkeyed with some of the other security things. Well, nobody adopted it because it's trying to skip over being a store of value. And you can't do that with the adoption of money. And so it's pretty much failed. And you can look at it and say, hey, maybe I made a little bit of money over the last 10 years in Litecoin, but when you do inflation adjusted, you didn't. And also if you look at it and you say, hey, they've created more dollars, that's why I have to measure this inflation adjusted. Okay, that's one thing. But with Bitcoin, if you measure that Litecoin versus Bitcoin, it's basically gone to 0 versus Bitcoin, because Bitcoin is going up and it's really only going up very small increments. So what people are beginning to do as you get into this is measure their net worth, unit of account, in Bitcoin. Why? Because what did we talk about? The denominator. If you denominate all of your assets in dollars and they keep creating more of them, more dollars, what's happening? It's diluting your assets or your purchasing power when you go to sell those assets, right? And so what more and more people are doing is realizing the game is to get as many of those 2.1 quadrillion units as possible, because they're measuring it saying, hey, I could invest in fancy cars or a really nice second home or whatever it would be, but Bitcoin outperforms it, and I'm measuring my net worth in Bitcoin because it's a hard cap. And I'm not trying to tell you that you'll get there where you'll start thinking of your net worth in this unit of account that is Bitcoin. You know, it's hard for us to change, right? Like we're all, ever since you started earning money, you were thinking of things in dollars, right? And so it's difficult, but like once you see it, like once you see the money printing and that it's gonna continue, it's something to challenge yourself with, to say, hey, if I could measure my net worth in Bitcoin, like how much more Bitcoin would I have had by not buying this other thing? And so I think that's the game. And I know that's hard to understand, but I'm just telling you what people are thinking. Yep.
Okay, excuse my ignorance here, but we're not quite ready for medium of exchange yet, correct, in Bitcoin. When that does happen, will that decrease the value of it?
It's a good question. I think that we're going to live in a parallel world for quite some time where the dollar will still exist. People will spend dollars and save in Bitcoin. And so I think in my lifetime and maybe even my kids' lifetime, that'll be the case. Like I don't see the dollar going away. But because of that, I think that people who hold on to it for a long enough time period will want to use it as a medium of exchange someday. So it's like, let's just say I bought Bitcoin at $1,000 and now it's worth $95,000. Well, maybe I'm 65 and I'm like, hey, I want to enjoy some of those gains. Well, if I can just, I can go on an exchange and pay 1% and pay the capital gains tax on it. Or I can go to the gas station and buy a tank of gas. And I can take my family on vacation and I could just spend it directly rather than putting it on an exchange. So what's interesting about it is, because I can send it across the world instantly with no permission from anybody, people will use it as a medium of exchange, and there's some people who do. But for right now, for most people, it's solving the store of value problem for them, and I think that'll continue for quite some time. The dollar is huge, like the dollar is everywhere, and so that's going to be a hard thing for Bitcoin to overtake, and that's why I think it's going to take quite some time. So am I telling, the message today, guys, is not go put all of your assets into Bitcoin, but you should know about this, and you should at least consider using it as a hedge, because you've seen what it can do, and where we're likely to go with these fiscal deficits that we have and the national debt. Somebody else had a question?
Yeah, I'm brand new too, so excuse my ignorance. How do you buy Bitcoin?
Yeah, it's a really good question. So we help people acquire Bitcoin and tell them the right places to go. So there's a lot of different exchanges. What I will tell you is one of the problems with telling people where to go is it's kind of specific to your situation. So there are exchanges where you can go. What I don't like about most of these exchanges is they charge a hefty fee and they offer all the other altcoins. And so people say, well, Bitcoin's 95,000. I could buy XYZ coin for 95 cents. And so you get in your head what's called unit bias. You're like, hey, for the $1,000, yeah, for the $1,000 I was going to spend, I'm only getting point something of Bitcoin, but I can get 1,000 of this altcoin that's worthless that I know nothing about. But I think, oh, because I don't know that there's a difference between Bitcoin and everything else. And so what we usually do is we stick to telling people, if you want to get started, the best way to approach it is just like your 401k. Or your IRA, where you just constantly put money away. Hopefully people are doing that if you're saving for retirement. And so what do? You put that on autopilot and you don't think about it, right? And so there's good solutions for that. One company I'd recommend is river.com. They are a really great company that only offers Bitcoin, and they offer dollar cost averaging, so you can buy slowly over time.
Actually do it for free if you set up a DCA with them.
That's right, yep. So basically what they do is they charge you 0.99% on the first buy, but if you set up recurring buys, so let's say you did $100 every week or every 2 weeks, you would buy, you'd get $99.01 worth the first purchase, but because you're setting up recurring, you get the full 100 in the subsequent buys. And if you change the amount or the frequency, they charge you again that 0.99% on that first buy. So they're really good though. They do proof of reserves, and you can actually put cash with them up to $250,000, like a savings account, and they will actually pay you 3.8% right now interest in Bitcoin. So if you're like, hey, I don't want to buy Bitcoin, but I still want to earn some, knowing that it's going to outpace the interest that I earn in my savings account, I'll just put the cash there instead of at my bank, and they'll pay me 3.8%, and I'm getting Bitcoin at the end of each month. And my principal, say you put $10,000 in, you have $10,000 to withdraw anytime you want, and you're getting the interest paid out in Bitcoin. So it's an interesting way to do it. Yeah.
Can you use funds from retirement accounts to invest in?
Yes, so River right now doesn't offer it, but I can point you in the direction of a few, like if you want to talk after or send me an email, or I'm happy to help any of you guys. But essentially the idea would be you need a custodian, and so there's different custodians that can help you do it, you know, with low fees and somebody you can trust too. That's the other thing. You want to make sure you can trust whoever you're working with. So
Can you say this is also what your company does or no?
yeah, so what we do is we really help people in all facets. A lot of what we do, we don't get paid for. We educate people.
Yeah, that's true.
But what happens is, as people go on their journey, we're able to help them, you know, keep a check on their financial advisor, or sometimes provide financial coaching services for folks, depending on what the situation is. And then another thing that's interesting about Bitcoin and what got me into it, besides, you know, just the number going up, was that I was a banker, and what I saw us do was put a lot of people who shouldn't have gotten caught up in compliance, we shut down their accounts. So if you've ever had a bank account shut down, it's a maddening thing. And especially if you've not done anything wrong. And some banks will just say, hey, you're too high of a risk, this is the type of business you're in, we're gonna shut down your business and you can't use our bank anymore. What's interesting about Bitcoin, and one thing we didn't cover, but I think this is important for you to know, is that you can actually take custody of Bitcoin yourself. So, if you buy it, let's say on River, you can buy it on River and you can hold it there, but the problem is that if you hit River's compliance or AML or any of that stuff and they think you have the same name as a terrorist, they can just lock your account, just like a bank could. So you're asking a third party for permission to spend your money. So if we want to get to this medium of exchange, you say, well, that can't happen to me. Well, I've seen it happen to pretty respectable people. And so what's cool about Bitcoin is the technology actually allows you to custody it yourself, and then therefore you can actually spend it or send it anywhere you want, anywhere in the world, without anybody's permission. No government, no bank, no intermediary or third party. And so a lot of people are starting to look at this as freedom money, saying, hey, I can use it as a store of value, as an investment, but I also have this other hedge besides, you know, the inflation hedge and the M2 hedge. I also have this hedge. If I need to spend it, I can do it without anybody's permission. It started out.
They can't take it from you either.
Correct, they can't take it from you. So it's peer-to-peer digital cash. It's like me handing you a $20 bill. Nobody can tell me I can't do that, right? As long as nobody's around, I can give you that $20 bill and you can give me value in exchange. Same thing with Bitcoin. It's peer-to-peer digital cash. And so if you're looking at it more than just an investment, we help people with storing it themselves securely, and then also teaching you how to actually use it so that you could say, hey, if the crap hits the fan or I get shut down anywhere or the government ever says they don't like these types of activities that I've been doing. And again, some people are like, oh, that sounds illegal, because we're so conditioned to trusting a third party and asking permission.
Where's that got us?
Exactly. And so I think more and more people are coming around to the fact that, man, it might be good to have something outside the system that stores value, because if you have a bunch of cash under your mattress, okay, you're free to go spend it, but it's a melting ice cube. Bitcoin, on the other hand, is hopefully going up in value in dollar terms, and you can spend it without any permission. Yes, sir.
So, just a far out question, but we've seen it before. So gold, people have used that as a way to exchange, and then we devalued it and went to dollars, which people understand in coins. So when you go to the digital age, and we have Snowmageddon in North Texas, and everything shuts down, no internet, no electricity, no way to exchange, because it can't be transmitted electronically.
Sure.
So, and who knows what could ever happen in the future.
Yeah, I would submit to you this, that the internet is has been decided by most governments to be infrastructure for public good, and in fact, it's become a national security issue to the extent that they would need to have it up and running, because if it goes down long enough, chaos would ensue in our society. So I'm not saying that the internet couldn't go down, but I am saying that it would be it would be a pretty crazy event, and we'd have far much more to worry about if the internet went down worldwide, number one. Number two, they actually have the nodes, which is what this all runs on. So it's decentralized, okay? So like at the bank, you go to the bank, and the bank is the central party that keeps the record of all the transactions. That's your third party that you trust. With Bitcoin, the ledger of all the transactions is kept on computers all over the world. So it can't be shut down as long as the internet's running, but they've even put the Bitcoin network in space. So it's running on satellites. And to your question, if you were that afraid of that event happening for a sustained amount of time, there is technology available where you could transmit a transaction onto the Bitcoin network to a satellite right from your house regardless. Like, I guess if your cell phone ran out of battery and you didn't have a generator or a neighbor that was nice enough to let you charge your phone, that'd be a problem. But I'm serious about it. Like, it's everywhere. So could it happen? Yes, conceivably. But is it likely? I think we're dealing with other problems that are far more likely that we can see. So hopefully that answers your question. And I don't think that's a far out question. I think it's good because of one thing that I want to say is that Bitcoin has been attacked since day one from all kinds of different ways, and it's still survived. And there's a reason for it. And the more you look into it, the more you'll realize why. Like, people have tried to attack this thing from day one. Go ahead.
So kind of go to those altcoins, like they're imitations.
Yes.
So don't know if they will continue to have value or somebody will because they think it's okay. But to me, it's like Bitcoin is like the US dollar. And then you can take the altcoins, and I'm just gonna say you take, a peso in Mexico.
Mm-hmm.
Everybody wants the dollar.
Mm-hmm.
They don't want to exchange on a peso.
Yep.
They will if they have to. So at what point do you have, maybe Bitcoin is the start of this, but I can't see all countries agreeing to it, a world currency?
Mm-hmm.
Because every...
Yeah, no, that's a great question. I do think it's a really good question. So the way I see it is this. Bitcoin is the base layer money. And the reason is because it is the hardest to create. So what I think will happen in the future is that all monies will be on subsequent layers above Bitcoin. So if you think of Bitcoin as the foundation, because it's fixed supply, you will have other monies built on top of it. So we already see it. Chris kind of mentioned something about stable coins. Have you heard about stable coins? So essentially a stable coin is a cryptocurrency that acts like a cryptocurrency, meaning you can send it anywhere at any time, but it's pegged to the dollar. And so people are like, well, why would I want that? It doesn't provide you with any yield opportunities. There's no real, because it's pegged to the dollar, it just stays at $1. But you got to think of it like this, and this is coming from a banker. It's a different rail. So the wire system, the ACH system, you guys might be familiar with these systems. We use them every day, especially if you're selling properties or doing any of that stuff. Those systems are 40 plus years old. They're problematic. They are ripe with fraud, all these issues, right? So there's all these problems with them, and these cryptocurrencies actually are a better rail. And so these stable coins are coming. And so in the future, I think it'll disintermediate banks who don't accept that as a rail. Like, people will use stable coins. Again, we'll use dollars as a medium of exchange, and we will save in Bitcoin. And so what you're gonna see is Bitcoin will be the base layer, and stable coins right now run on a variety of other different cryptocurrencies, but they will also run on top of Bitcoin. And that's where we're going. So I think you'll see layer 2s and layer 3s that allow Bitcoin to scale for all these transactions that occur. And we already see Visa's doing it, MasterCard. I mean, I could go on and on with all the companies that are looking at it. And in fact, the bill that'll probably get passed before the strategic Bitcoin reserve that's in the Senate is the stablecoin bill. It's called the Genius Act. So that's your homework after this. Look up the Genius Act. It's all about stablecoins. And I think it's a huge threat to most of my clients because I work with community and regional banks on the Oida side of things. And if they don't adopt stablecoins in some way, it's going to eat their lunch because they're going to be sitting there using old rails that will die probably with, some of us that are used to only using that and refuse to adopt stablecoins. When we die, the younger generation is not going to be using ACH and wires when they can use stablecoins. I'm just telling you.
They're already
So,
proving that.
exactly.
Yeah, one thing interesting too is that Tether, which is the biggest stablecoin issuer, they're the most profitable company in the world per employee.
Yeah, so they have about,
money.
they're up to about 60 employees. So there's a stable coin that you probably want to look up. They have $146 billion in stable coins issued. And so I'll just explain this real quick. It's not a Bitcoin related thing, but it is important because it does circle back to Bitcoin. So stable coins are necessary in especially the third world. Why? Because we talked about those fiat currencies. Their problem is that they have, printed way too much money. Their inflation is way higher than the dollar. And so if you're somebody, say in Argentina, who's had their currency have to be reissued on a new standard every 10, 15 years because it's gotten so inflated, you're scared that your paycheck won't pay your rent. So immediately when you get your paycheck, the strategy is you buy stable coins because the dollar is stable. So you buy Tether and you hold on to it until your rent's due, and then you pay your rent. Why? Because the dollar holds its value better than the Argentinian peso. And this is true throughout the world. So here's the important thing with Tether. There's a demand for it. And so when you think about it, you have to give Tether dollars. And what do? They issue you this digital fake token that nobody can see or believes in, right? That we all think is maybe a fake token. So what do they have to do in order for it to not be a Ponzi? They have to keep the dollars that back up those digital Tether dollars in order to supply anybody who comes to them and says, hey, I want my money back. Does that make sense? So they have to have reserves, kind of like a bank. And so what they figured out is that they can, because they don't have all the banking regulations that all our banks do, so they don't have that overhead. What they figured out is they want to be compliant, so they don't want their system used for terrorists and other bad things. So they have that part. But what they do is they take the reserves, they hold on to enough, let's just say 10%, like a bank would. And so they'll have, let's just say, 10% in cash in banks, earning interest, but we know that interest is not enough to keep up with inflation. And then they keep the bigger amount in US Treasuries. Why? Because those are pretty liquid like we talked about. Well, what does that do? They're basically getting free deposits. They're paying out no yield to people who are doing this because it serves a purpose for those people in Argentina who, they're facing high inflation, so it serves a purpose. They get free deposits. They invest it in short-term US Treasuries. They get a yield from the US government. And then what do they do with that yield? They buy Bitcoin. And so what's funny about it is they are the most profitable company, to Chris's point. One, because they don't have to abide by all the banking regulations. Two, they get capital that they don't have to pay interest on. And then three, they're putting it into the profits into Bitcoin, which has been the best performing asset over the last 16 years, bar none. So it's kind of a wild situation, but when you look at it from like a banker's perspective, it's a scary world. And so
You're bypassing banks altogether.
yeah, you don't need the wire system. You don't
And also
need
say too, it's also really good for bypassing like services that do remittances like Western Union, they'll rip people off, charge these crazy fees. Now you can send money across borders.
It's true.
For basically nothing.
So there's a lot of people who have come to this country, legally or illegally, and they make money and they remit payments back home, right? And a lot of them have used Western Union in the past, but they're eating, depending on the country it's going to, lots of it, right? A high percentage, 10 to 20%. And so more and more people are figuring out, hey, we should be using either Bitcoin or stable coins to send value and remit back, because we can bypass these third-party services like Western Union or our financial institution. So the trend is your friend, and it's something everybody in the room should be paying attention to.
Trend is my friend.
Yeah. Adoption is occurring.
So,
Have you heard, I'm sure you have, Warren Buffett and Charlie Munger's
Yeah.
statements on that, and what would you say to those guys?
Yeah, so I love those guys because I think they're super intelligent. Obviously, Charlie Munger's gone now. One of my favorite things that Warren Buffett has said is that Bitcoin is rat poison square. And I always, when I gave presentations 10 years ago, that was like the first thing I'd bring up because that's what people had heard. And it's okay for a 90-plus-year-old man to not understand the technology. He was also very late to buying Apple stock, and yet he still found value in it. And so I don't know that he'll be around long enough to actually find value in Bitcoin, but one guy who's done super well he's not going to control the market, right? Like, people are deciding. And so that's why I said the trend is your friend, because and I'll just say it, like, as I die off, the older generations die off, people are going to the frictionless money and to the money that solves the problem. We're getting more digital, we're not getting more analog. I think we'd all agree in most areas of our lives. And so I think it's, he's done really well with understanding the current system, but the current system, as we see, is starting to show its wear, and it's starting to show breakage. And so now a new paradigm is coming, and a lot of people still haven't figured this thing out yet, including him, and I think that's okay. So hopefully that answers your question. You had a question first?
my brain has moved on, so I'm not sure I'll word this right, but, so you've given us some background on stablecoin and Tether. Can you now go back and tell us what you started saying something about a bill?
Yeah, the Genius Act. Yep.
Tie it back in so that I.
Yeah, so the
you're
Genius
saying.
Act is aiming to regulate stablecoins so that the banks feel like they're getting a fair shake, so they don't just get completely disintermediated and they all have to close their doors. And also tries to put guardrails around any company that would issue stablecoins. So think of it like this. A bank has certain regulations that they have to abide by. That keeps your deposits safe at that bank, right? And they also backstop it with the FDIC. And a lot of people don't know that happened, in 1933, which was right after, the fall of all the banks. A lot of people lost money in those banks that failed. And so that's why the FDIC was born. There's an act. So this will be something that puts up guardrails for companies to regulate them on stablecoins, so we don't face, hey, a whole bunch of people from the state of Texas gave, all this money to this stablecoin issuer in Austin, Texas, great tech company, and come to find out, because they were never audited, they never kept the reserves. They went and spent it on parties on Lake Travis. So I think, like, yeah, so I think the idea would be, it's guardrails, right? It's making sure the consumers and the businesses that use those stablecoins can be protected and are safe, and that these companies are doing it in a safe way. So
it's a good thing.
it is, yeah. I mean, if you're a fan of stablecoins, yes, you have a question.
So the statement mining Bitcoin, or we're using flare gas to mine Bitcoin, can you explain that?
Amazing, because we never get to this question because we're running out of time, and she's like, hey, my cell phone's gonna die. Okay, I'll try to do this real quick. So this is important because this actually explains the issuance real quick of Bitcoin and how we know there's only gonna ever be 21 million, okay? So has anybody, not you, Chris, but has anybody heard of the Bitcoin halving? Has anybody ever heard that term? Okay, you've heard it. So let me see if I can find this slide. Okay, so these little dots here on this are there for a reason. These dots, those are the halvings. Okay, so we've had 4 halvings in Bitcoin, and that does not mean the price goes in half. This is how Bitcoin's issued in a fair manner. So people, what they do, actually, yeah, we've had 4. What people do is they, if you think about it like Visa and MasterCard, so when you guys go out and swipe your card, what happens? Visa, let's say it's a Visa card, Visa does all the settlement of that transaction, right? And they have these giant server farms that are processing those transactions, right? So they can't do it for free, so what happens? The merchant pays the fee on it usually, okay? So that's how they make money. But they're giving computing power and processing power to a network so that you can go anywhere and just use that card. All right, the reason I'm talking about Visa and MasterCard is because it's something everybody uses, and you can hopefully understand the centralization component of it. But with Bitcoin, because it exists on computers everywhere, when Bitcoin started, the big question was, how would you get people to give up their computing power and electricity towards this new network without any type of return? And so the way they did that was they would issue new Bitcoin. So the way Bitcoin is set up to run is a batch of transactions gets added to the network or to the ledger permanently, cannot be changed, every 10 minutes. That's how it's set up. So every 10 minutes, all the transactions from all over the world that are broadcast in the last 10 minutes get added to the ledger. That is done through this process of mining. So the people who are mining are actually lending their computing power and their electricity towards the network in order to add that batch of transactions every 10 minutes. What's their reward? At the start, when it first started, it was 50 Bitcoin every 10 minutes. But Bitcoin was worthless, so people were just doing it as a hobby. Remember, I was telling you it's a collectible at the start? So people were just kind of doing it for fun, like, hey, this is a cool new thing, let's do this. The nerds were doing it. And then we moved and we had 210,000 blocks of those transactions. So 10 minutes, 210,000 times. At that point, the network was set to have a halving. And so what the halving means here in 2012 is that the reward gets cut in half. It's actually not the price, it's the reward. So the miners got the reward cut in half every 10 minutes. It was now at this point in time in 2012, only 25 Bitcoin every 10 minutes.
And how many transactions?
How many transactions can fit?
Well, in the beginning you said every 10 minutes there's so many transactions.
Yeah, so think of it this way. We all want to send a transaction on the Bitcoin network. We're the only ones that exist. We all want to send a transaction. Let's say you send 2, you send 8, I send 1, so on and so forth. The miner, the person giving the computing power and electricity, wants to include all those transactions in that batch or that block of transactions.
What's the size of the batch?
It depends on how many people are broadcasting. So how many people are trying to add a transaction. So that is, it's hard because based on the amount of people that have adopted it or the amount of transactions people are sending, the point here though is that the miner, let's say there's too much, it's called the memory pool, okay? So it's the memory pool of all the transactions that have been broadcast. Let's say there's too many transactions. What they'll do is they will prioritize the transactions with the highest fees included. So when you send a Bitcoin transaction, you include a fee with it. And if you haven't outbid everybody else, you'll move on to the next block. So if you have a high value transaction and you really want to make sure it gets included in the next block, you'll pay up to get it included in the next 10. But you'll know that 10 minutes later, another transaction's coming, right? So let me get back to this. 25 for 210,000 blocks, which was every 10 minutes, right? All the way till 2016, the halving happened. New Bitcoin created every 10 minutes as a reward. 12 and a half, 6 and a quarter, 3.125. That's where we're at right now. This happened in April 19th of 2024. What do you see if I showed you a chart happens every time after the halving? The price spikes. Why is that? It's because if you think about it, if I'm a miner and I have computing power and electricity power that I'm lending to this network to try to get a reward, and now my reward gets cut in half all of a sudden, but my electricity costs are still the same. How do I operate?
You're at a casino trying to chase
Exactly.
good
So
money after bad.
yeah, so the only way is for the price to go up, and that's built in because of the fixed supply. So we have more and more demand, more and more adoption, and that creates these price spikes. And then eventually the price gets so high and out of equilibrium, and people say, hey, at that price, I might as well sell. And then you have more sellers than buyers, and the price comes crashing down. This will continue. And so we're in the middle of a price spike, and it'll probably come down maybe later this year, maybe next year. And who knows how low that'll go, but also who knows how high it will go. We've already hit 109,000 back in February, and now we're at 95 again. Could go to 150, 250, who knows?
So Bitcoin isn't a limit on the number of transactions.
No,
But at some point, you reach a diminishing return other than the value of
it's a time chain. So the idea is, how quickly do you want your transaction included in the permanent ledger? So you can broadcast your transaction and I can see it, but because it hasn't been accepted into the next 10-minute block yet, because you didn't pay enough in your fee, you have to wait until there's a time of less congestion on the network where there's not as many people broadcasting transactions, and the miner says, oh, hey, your transaction that you only want to pay 34 cents for, it's one of the top fees that's being offered. It's the middle of the night. Nobody in China is using it today. We'll just include that because we want to take your fee. So the true reward for these people, just so everybody knows, the true reward for the miners is the block subsidy, which we talked about, 50 Bitcoin, then 25 Bitcoin, then 12 and a half, and so on and so forth, plus the fees that are being offered in the transactions that are in that memory pool. And so at the end, you can only have so much, right? So we're at 3.125, we'll go down to 1.6 something, right, in 2028, the next halving. Eventually, we get down to where you can't have the smallest unit of Bitcoin. And so then at that point, the miners will be getting their reward as only the transaction fees that you and I broadcast. But you can think about what the price will be at that point. And if you do the math, it's about the year 2140. So we'll probably all be gone. But it should be able to sustain itself then.
Didn't it by like 2035, I think, that 99% of all Bitcoin ever produced can be mined?
Yep, exactly. I think I'm over my time. Any other questions? Was this good for everybody?
Yeah.
I know it's a lot. You guys are probably all ready for the nap now. Hopefully I didn't wear you out too much. But if anybody does need help, again, a lot of what we do is gratis. I'm happy to talk to anybody and your situation. Like if you want to look at things or talk about where to buy in your retirement, all of those things, like happy to help anybody. And like I said, doesn't mean I'm going to charge you anything. It's more based on your specific need and if there's an opportunity to help you in a way that we can. So,
Thank you.
yeah.